Okay guys, now I just want to make this part 2 because I wanted to show an illustration of the concepts and the liquidity pools so that way you guys can see it for yourselves. Now again, this is just to build the foundation and to understand the concepts, and I just wanted to show you guys an illustration of exactly what I mean by having areas of liquidity that's very prominent in the market that you're typically going to find some decent trade setups. So right here on the indicators I have my Asian range, so you're going to see the Asian range high and low. And this is good. Let me actually make this the last 30 days, 35 days. Let's see if it will do that. Okay. No, I think there's a cap on it. Let's say the last 30 days. Okay, perfect. So yeah, so you see, if you see these lines, just the Asian session high, the Asian session low, and I'm going to, the session color right here, so the blue one is going to be London and the red one is going to be New York. But let me just put that away in the meantime. And I'm going to show you guys each indicator on of its own. So this is just a blank chart right here. And I'm going to start off by showing a previous day high and low. And then you guys can see throughout how these levels kind of have a major impact. Like look at right here, right? We have an untapped liquidity pool there because price never went up. And look how when price took it out, we had a reaction lower. Now, also this one right here, this was a prior daily high. Look how the market kind of reacts, and then we eventually drop lower. Subsequently, we have this right here. We have a prior day low rate. And as you guys can see, we're just seeing multiple examples of this. Now, again, it's not to say that every single time price pushes up against a prior day high, it's a sell, or if it goes down and takes out a prior day low, right? Like this example here, because it took out this liquidity, it took out that liquidity. It's not to say that when price does this, it's going to immediately reverse every time. There has to be obviously context and framework. But even just looking at the chart right here and you see examples, you can see that this is very prominent level. Now, I want to go ahead and that was a previous day highs and lows, and I'm going to show you guys previous week highs and lows. Same exact concept. It's going to be a little bit more difficult, honestly, to kind of see it from this example because this is kind of like, you're going to have a lot of circumstantial stuff right here. Like you do see it right there, but again, sometimes if the market is kind of consolidating, it's kind of hard to see. But you know what? Let me do this. We'll go on a weekly time frame and let me remove the indicator. And you guys can kind of see it for yourself. Look at how whenever the market takes out a prior week high, right? This is right there is a prior week high. And let me make this a little bit darker. And we're going to just go through multiple examples of this. You know what? Let me go to more recent examples. You see again, you see prior week high right there. That was a prior week high. Price takes it out, kind of forms a swing high, and then reverses. And you'll just see multiple examples how this week we took out this prior week high. Price redrops. Price takes out these prior week highs multiple times, 1, 2, into an imbalance, and starts to drop. Same thing here. You see prior week relative equal highs from two untapped liquidity pools, and you're going to see how price went up, dropped, and continues lower. And again, you're going to see multiple examples of this. Now, ideally, you want to look for these types of rates in certain trends. So if we're like in a downtrend, you kind of want to start looking for the market to kind of push up above like a prior day high or a weekly high and then kind of continue lower. That's really the ideal scenario that we can look for liquidity pool rates. And again, even on the downside, we could see, you know, price took out this untapped liquidity pool that was never traded below 2. It was a prior week high before, and price takes it out and then has an impulse push up. Even on the bullish side, we can see on multiple occasions. Right here, this was 2 weekly lows that were never tapped. And again, this could be a 1-hour chart, guys. It doesn't have to be a specific time frame. But look how the market takes it out, and then we have a reaction. The market trades below this right there. A prior weekly low forms a swing low in here, and then price pushes up. Again, you're going to see multiple examples. Now, when we can obviously correlate this with higher time frame structure, with overall bias, it really makes it that much easier to kind of identify specific trade setups when we put this all together. Now, that was the we went over the daily highs and lows, and we went over weekly highs and lows just now. Now let's go to session highs and lows. Again, this could be applied through any type of concept. So right here is a perfect example. Look how the market kind of forms. Let me go ahead right here. I'm going to just first start off with just the session highs and lows. Look at how the market right here, we had a London session high. This was never tapped. Look at how price went up and rejected it. We also have, look at this New York session high right here. Inside of this, price rejects it in a London session, drops, creates an imbalance, price comes up, retests, close the imbalance right there. Price offers a setup right here. Again, you guys are going to see this in multiple occasions. Now look at this example too as well. Price kind of pushes up, takes out a prior session high, which was also most likely a prior day high, and you guys kind of get the point. This one, this big wick right here actually took out multiple liquidity pools. I believe, yeah, it took out these equal highs as well. That was never tapped. So as you guys can see, when the market reaches to specific price points, again, with proper context and proper framework, we can identify potential opportunities in trades. Now, obviously, there's going to be specific ways that we can use to enter it in our confirmation entries, which will again be in the section where I talk about lower time frame confirmations. So this is just an illustration to kind of show you guys this happens all the time. And this is why we can utilize multiple opportunities to take advantage when we see a lot of things in confluence. And then just for completeness sake, I'm going to go for the Asian range. And again, you're going to see it right here. Asian range high, taken out, boom, price drops lower. Asian range low, taken out here, boom, price pushes up. Right here, we have another raid right inside of London, price pushes up. We have the Asian range. On this day, I remember this was I think there was like some FOMC speech or something like that. It might have been FOMC or some interest rate news. But you guys see, price takes out this low, and then price takes out this high, and then kind of cleans house and starts to head lower. Again, this is just to reiterate the point is that not every single time price takes out a prior session high, prior day high, or a weekly high or low. It's not to say it's going to be immediately a reversal. There has to be framework and context. Again, we're going to get into so much. If you guys think that this is already a lot, just wait until we get into the top-down analysis and how once we put everything together, how we can formulate a very solid trade plan and solid trade idea. But yeah, guys, this was just a video to show you guys how prominent these levels are. You know, I mean, you could just look for them all the way in the chart. And the crazy part is this: I used to actually just trade a prior day high or a prior day low raid in confluence with structure, and I used to be able to make money with that. But obviously, I want to kind of improve and kind of like get better, have multiple trade setups. So obviously, I've graduated from that. But again, it's just to show that you can really make a whole system just off of liquidity pool raids and how well that this can be used. Now, if you could use liquidity pool raids with structure, with a lot of other liquidity concepts, you know, with kill zone timings, with order blocks, with imbalances, and you can formulate everything together, that's when things get really interesting, because you're really able to take your trading to a whole nother level, man, when you're able to kind of merge all these concepts together. Now, hope you guys enjoyed that one, and now we're going to start talking about distribution and accumulation cycles.